everybody, it's Kat Williams here with eXp Realty. Today I'm going to be giving you an answer to a question or two about mortgage industry and what everything means. And I am here today with Brandy Nelms of Caliber Home Loans in Olympia. I know that VA loans are specifically designed for veterans. What are the requirements for a veteran to be approved for a VA loan?
So we have to get their certificate of eligibility, which basically shows that VA is granting them eligibility for the loan. And typical credit scores for VA are as low as 580. VA is, of course, for veterans. In some cases, their families as well if they're survivors. It's a zero down loan that allows for 100% financing. And typically they are a little bit more lenient on credit requirements and credit past as well. We can also push up debt to income ratio a little higher on those ones too.
What are the requirements for a conventional loan, and what is a conventional loan?
A conventional loan is typically backed by Fannie Mae or Freddie Mac, which are the agencies that handle most of those loans and create the guidelines. There are as little as 3% down requirements, but typically conventional is used for people with stronger credit history and larger down payments. With conventional financing, you are required typically to have a 620 credit score. They recently just adjusted some guidelines where if one borrower has at least a 620 and another one has at least a 580, we can kind of commingle the scores and see if we get an approval through the automated system. So they're lightening up on their credit requirements.
What is a USDA loan?
USDA is another great zero down financing option for those buyers that are looking to purchase in rural areas. So the stipulation is that it has to be a rural area, and if you're not quite sure if a home or address will qualify, we can always look it up in USDA's website and determine for sure if it does. It is one loan that's 100% financing. There is a very minimal monthly mortgage insurance amount that gets charged in these loans. There are some income limits depending on family size and county that the home is in, but it's a great loan program to have one payment for zero down. It's also the only loan program that if the appraised value comes in higher than the purchase price, you can roll your closing costs in and have that covered by that.
So there are rehab loans that people can get if they want to do some updates to a property that they buy. Can you tell me about those?
Yeah, so the FHA Rehab Loans basically allow a buyer to roll in the cost of improvements into the financing to make the home appraisable, or to roll in, the improvements that you want to be livable to purchase that home. Basically, the down payment is based off the cost of the home plus the cost of the improvements that you're rolling in. Depending on the size of the loan and what the improvements are, there are two different options. One is a streamline option, which basically allows for very minimal dollar amounts and minimal work that's being done, such as mostly cosmetic things. In that instance, you're a lot of times allowed to do the work yourself. If you're going for more, where there's actually going to be some structural stuff done or larger loan amounts because of the amount of improvements you want to roll in those cases, you oftentimes have to have a contractor do all the work, and the contractor has to get approved with the lender. They also bring in a HUD consultant that has to sign off on everything as well. The way that these work is at closing, you will get, basically depending on the amount of the money and how much work is being done, they'll determine how many draws there will be. So sometimes it's a matter of one draw being done at closing where they give you the funds, you can go do the repairs, then the appraiser goes back out and verifies, and then you're done. Other times, if there's more extensive work being done, they'll divide the draws out into 2 or 3 draws. At closing, the contractor goes and does the first set of work, and then the appraiser goes out and verifies, and once they verify the work's done, they'll issue another draw for the next set of work to be done. So it just kind of depends on the extent of the work and how much is being done.
Well, I think that about wraps it up. You've heard of several different types of loans. If there is a loan type that we haven't discussed yet, please shoot me a message and let me know. I'm happy to get some information on that for you. I'm not the mortgage expert. Brandy is, and I'm happy to get an explanation for you from her. My contact information will follow, and it's also in the description of this video. Everybody have a blessed weekend, and we'll see you next week.